Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex Gold and S&P fundamental and technical analysis for the week ahead, starting the 31st of March. And this week's fundamental analysis and technical analysis video is slightly late, recording this on Monday as I'd had a extremely busy weekend yesterday. Was Mother's Day, so spending it with the family and stuff. So yeah, I'm just recording it late, but better late than never. Yeah, getting into the week ahead. And in the week ahead, next week, investors will closely monitor developments in the trade war as reciprocal tariffs on imports to the US are set to take effect on April the 2nd, including a 25% levy on autos. The US jobs report, will also capture attention alongside ISM PMIs, which will provide insights into the labor market and private sector performance. Additionally, the official and Caixin PMIs for China, Japan's Tankan business surveys, preliminary inflation figures for the Eurozone and Germany's factory orders will be in focus. The PMIs for Europe's largest economies will also be closely watched. Meanwhile, the Reserve Bank of Australia is expected to keep interest rates unchanged. A couple of central bank announcements and some important news, especially around the Eurozone inflation, in my opinion. And of course, tariffs, which is basically dominating everything. Looking at the dollar index, and again, the equally weighted dollar index is just really the representation of dollar strength against all of the major currencies equally weighted. Now, there are fears, of course, around US stagflation fears rise ahead of tariff hit, according to ING. Hot inflation and cooling consumer spending are trends that are likely to be intensified by President Trump's aggressive moves on tariffs and government spending cuts. Stagflation fears are rising and will constrain the Fed's ability to cut rates further. Now, that might sound positive in terms of less rate cuts, but just because a central bank isn't cutting rates doesn't mean that it's seen as a positive, because at the end of the day, if the economy is going into a recession, then that is seen as a negative. Stagflation is a bit of a tricky one. It's a bit of a conundrum, really, for central banks, because especially a central bank really that has a dual mandate, and a dual mandate meaning that they are focused on inflation and jobs at the same time. And the conundrum really is that if you've got rising inflation, then typically you want to hike rates, but at the same time, if you have a contracting economy, then you really want to cut rates. Depending on which is the bigger threat when it comes to inflation or recession, central banks will have to make a bit of a choice. Yeah, the US at the moment, I think, is a bit of a tricky one. I would say that my opinion at the moment is still there are buying opportunities for the dollar, which might sound obviously against the consensus at the moment, because everyone is quite doom and gloom on the dollar. But I think that the Fed and the dollar may benefit. Matter of fact, I wouldn't say the Fed, but the dollar may benefit from a risk off environment. And if it's seen as the US economy maybe doing better than other economies while they're trying to sort out their tariffs in this tariff negotiation, then in fact the dollar should actually benefit. And of course the key word is should. So let's say, for example, Europe and the US are going through negotiations, and both being stubborn about their negotiations. Now, if Europe come in or are worse off than the US in the negotiations, then of course you want to sell the euro and buy the dollar, right? So it's the same. And the same would apply to any country that is negotiating with the US. If Canada negotiating or not negotiating, and tariffs being applied, and it starts to affect the Canadian economy way worse than the US economy, then of course it means that Canada are going to have to literally come to the table again to save their economy, and then the US gets what they want. And in the meantime, the US pretty much, and the dollar should appreciate. So I think that although it's not guaranteed, nothing ever is in trading, but I think that's really where my bias is at the moment. That doesn't mean I'm all out buying the US dollar, because of course we still need the data to support that narrative, but that's where I'm leaning towards with the dollar. And so, yeah, tariff countdown spurs risk asset exodus as favor of safe havens. And strangely enough, the US is also seen as a safe haven tariff. It kind of switches, and it depends on where the risk event is coming from. And of course, it is emanating from the US, but it can also, help the US dollar. And when I say help, I mean appreciate, really. Help is kind of the wrong word. It can appreciate the um, the US dollar. So, I mean, if you were looking to buy the dollar last week, of course, last couple of weeks, then you should be benefiting at the moment from a dollar hold. And if it does continue that the dollar narrative is to buy the dollar, during these tariffs, then of course, you should be looking for buy trades now. If not, then you can probably look for some sell trades on the dollar right now as we come into that level of support turned resistance on here on the index. And so you can look for probably sells there. If not, then you're looking for really prices to move up to this supply zone before looking for short trades. And again, just to reiterate, I think buying the dollar is, probably has a slighter edge. Doesn't mean it's guaranteed. So any dollar trades that I'm entering into are going to be really kind of small positions. But I totally understand if you're looking for dollar sells as well, right? Not everything is either a buy or a sell. They can be a buy at lows and a sell at highs, and that's really what the dollar is. The dollar yen, and the dollar yen, again, not really a pair that I'm looking at, but I am a buyer of the yen in a risk off environment. Of course, the yen should be really seen as a safe haven currency, and risk off returns with yen outperforming, and ultimately the yen high inflation and risk off will help the yen. Why is high inflation help? Because higher inflation means rate hikes. So rate hikes are a central bank's way of trying to appreciate the currency to counter high inflation. And rising inflation is really a depreciation of a currency. And so if you also have the central bank trying to appreciate the currency while you have um, risk off, which also is, money's piling into, risk off assets, safe haven assets like the yen. That's really, a winning formula, right? So ultimately, I would be more of a buyer of the yen. But would I be a buyer of the yen against the dollar? Absolutely not. In my opinion, there are definitely better currencies to trade the yen against. But if you are looking for a short trade, on the yen, then you're looking for, of course, you should have been looking for something on the Friday as prices came up to these levels here, maybe on the Tuesday, Wednesday, Thursday, Friday last week. But if you're looking for buy trades, then of course you can look for a pullback into a demand zone to look to buy the dollar. But ultimately, I'm not looking to trade this pair, and neither am I trading the dollar Swiss. Basically two risk off currencies, not really my cup of tea. And so again, you can either look for buys or sells, meaning that you can look for buys at these highs, or if prices pull back, you can look for sells at these lows. I think the dollar does have the edge though over the Swiss franc, but again, if I'm buying the dollar at the moment, it wouldn't be against the Swiss franc. But either or, you can look for trades either side. I would be looking for, though, buys on the dollar CAD. And I was saying to the Discord group last week, in fact, the dollar CAD has been on my list, and this is the fundamental analysis spreadsheet, which I go over in the private members group, and you can see here that the dollar CAD, I definitely have a long bias, right? And I've had a long bias for a while. So, yeah, just looking really at longs, and I think the dollar and the US economy should fare better than the Canadian economy. So, again, I was saying this last week, if prices pull back down to this area, look for longs and look at basically what's happened this week, right? So, if you manage to get into that, well done. If not, then you're looking for again another pullback, maybe even deeper before going long. But again, it does depend upon the situation with the dollar. If you are looking for sell trades, you've got quite a wide zone of supply. To be fair, supply. Right, it's quite a wide zone. Wide zones, of course, doesn't mean that necessarily you can't trade them. They're untradeable. If you've got a wide zone, then just look for areas of support and resistance within those wide zones of supply and demand. And so that would be probably one is not necessarily a great one. A bit tricky at the moment, to be fair. Nothing immediate, but yeah, I mean, I'm not really looking for sells anyway, so I wouldn't necessarily do the analysis. I'm looking for long trades. So any pullbacks down into a level where we've got clean price action, like something like that, where you've got, support there. Move it up slightly. You've got support, support, resistance, support, all within a demand zone. Then that looks much better in terms of me looking for long trades. Looking at the pound, and the pound last week had the budget, and I was anticipating the budget to be a bit negative, which it wasn't. And I say negative for the pound, but to kind of depreciate the pound, and it really wasn't. It was a bit mixed, but doesn't mean that um uh, bad news for the UK economy isn't potentially on the horizon. It says here that one of Britain's most esteemed economists has warned the government's fiscal plans will unravel, and we needed a minimum of 50 billion spending cuts, says Douglas McWilliams, the founder of Centre of Economics and Business Research. I'm not sure that the political commentators realize quite how badly this budget is going to unravel. Unless I'm badly wrong, which I have been before, but normally I'm not, the moment it appears that growth is running way below 2%, we are close to IMF territory, he warns. So McWilliams is talking about a moment in the future when buyers of UK government debt go on strike on fears that the UK's debt burden is unsustainable. And it says here a few more paragraphs. When investors stop funding the government's borrowing, it will have to turn to major global institutions such as the IMF for a bailout. McWilliams explains this point will come once markets see the economy trending down and not up, as predicted by the Office of Budget Responsibility. In today's media coverage of the spring statement, no one is asking the crucial question: if the OBR has made such a hash of forecasting this year's GDP growth, why should we believe any of their revised forecasts for this year and the next 4 years? Queries Andrew's sentence, an economist and former member of the Bank of England's Monetary Policy Committee. Investors lend to the government over multi-year timeframes on the understanding that economic growth ultimately guarantees their debts. That is very important, right? So if the economy is going into a recession potentially, then of course, bondholders, buyers of government debt, are going to be fearful and are going to dump government debt and not buy it. And therefore, that's going to really affect the pound. And that's what I think is going to happen now. Me shorting the pound last week, or the week before last, sorry. I got in, I think, a bit too early in terms of, the data. But I am leaning towards selling the pound. I've mentioned this several times to the guys in the private group, and now obviously to you guys on YouTube, right? But that's where my bias is. And of course, we need the data to support my theory, right? There's no point in trying to get short if the data is actually saying, well, the economy is growing. It doesn't make no sense. So definitely need to get data to support my trade idea. And it says here, when growth disappoints, tax revenues ultimately undershoot, meaning more money must be borrowed to cover the shortfall. So yeah, that's really where we are with the pound. And so I do believe that the pound is a short. Whether it's a short against the dollar, I think at the moment, probably in a risk-off environment, you'd probably want to be more of a buyer of the dollar than the pound, as the pound is more of a risk-on currency. But again, this pair not really looking like a buy or a sell either way, or you could actually find reasons to do both, right? You can for a buy or a sell. Um, but in terms of an actual taking a trade on this at the moment, where it is, probably not. I want to see maybe prices move up to beyond the 130s before looking at going short. And that'd be my preference in terms of the direction with the data that we have. Pound yen is a trade that I'd probably look for short trades on. Didn't manage to get in on this, but I know some traders did in the group. And so, yeah, basically the trade is going well for some now. Again, for me, in a risk-off environment, you'd really want to be a buyer of the yen and really a shorter of the pound. But again, it really does depend upon um, how the market starts to react to Donald Trump's tariffs. But again, risk off as long as you're seeing, the VIX, the volatility index, continue to make some highs, then hopefully the yen is a beneficiary of that. But I think the path of these resistance is probably now to the downside. The euro index, and again, just like the dollar index equally weighted, the euro index equally weighted is euro strength against the major currencies. Now I am a buyer of the euro and managed to buy last week when prices pulled back into this demand zone, not necessarily on the index. The index is just used as confluence, but managed to get in on the euro New Zealand, which I'll talk about at the end of this video in the trade updates. So last week was a great, decent week, actually good week, fairly good week, um, and into this week as well. But yeah, we've got really the euro being a bit more of a buy, and that really is driven by the potential for inflation to be a bit sticky. So eurozone inflation stuck above 2% may keep ECB outcome open. So crucial eurozone inflation data next week, which is like tomorrow, may reveal only limited improvement, offering arguments for both sides of the debate on whether to cut interest rates again. And it says here, as one of the last pieces of hard data awaited by officials before April 17th decision, the consumer price report on Tuesday is likely to be the most closely watched in months. So if inflation is seen as remaining stubborn, sticky, meaning that it's not heading down to their 2% target as quickly as they want, then central banks and the European Central Bank is likely to actually maybe reduce the amount of rate cuts, and a reduction in rate cuts typically can have the effect of appreciating a currency. So because you're not devaluing the currency as much via cuts. And so the euro, along with fiscal spending from Germany as well, has a lot going for it in terms of the reasons to buy. And again, of course, you need the data to support that. But for now, it's a buy the rumor. And then as you're in a trade, if the rumor, becomes true and the evidence supports and the data supports the rumor, then you just keep holding or just, keep buying, right? Or look for pullbacks. So euro for me is more of a buy. But overall in the tariff, when you've got the tariffs going on in the background as well, the euro dollar is a tougher buy, right? It's definitely a tough buy because, of course, prices are being driven more by the sentiment side, and there's reasons again to buy the euro. There's reasons to buy the dollar. There's reasons to sell the euro. There's reasons to sell the dollar. So when you haven't got necessarily a clearer divergence on currencies, I typically tend to stay out because you then will get maybe some sort of ranging market, some auction where you go, prices are moving sideways, which is basically what's happening at the moment. So yeah, market's obviously undecided. I'm undecided, so not gonna look for any trades on the euro dollar. But if you are, then you're looking for your options are a pullback into maybe the bottom end of that demand zone, not the strongest demand to be fair, or you're looking at a pullback into a supply zone, the top end of that supply zone to look for a sell trade. If you're looking to buy the dollar and sell the euro, euro yen, again, you should look really, I would say, probably for more sell trades, but with the euro being quite strong at the moment in terms of definitely sentiment. Um, the yen may not necessarily appreciate a lot against the euro. Again, you want to always look for strong currencies versus weak currencies. And so the euro yen really isn't on my list of currencies to trade. Although yes, I'm a buyer of the euro and a seller of the yen at the moment. But if you want to trade this pair, then you're looking for really a pullback into that zone there to be a buyer of the euro. If you're looking for sell trades, then you're looking for really a pullback up into probably this supply zone. That level's been touched several times. So maybe you want to look for maybe something slightly higher above the 164s to 165 area before looking at going short. Euro pound, again, not really my cup of tea in terms of pairs to trade. Both are pretty even at the moment. Um, so in terms of data, so again, you can go either way, right? You can look for buys or sells. If you're looking for a short trade, then of course prices are in that zone right now, right? So you've got a nice supply zone alongside as well some support and resistance. All right, you've got support there, resistance there, and then have you got any more? Yeah, you've got a little bit of support there as well. You had a bit of resistance on this wick here, so definitely a level that's been traded, but you have to have, I think, high conviction in wanting to buy the pound over the euro. And again, for me, not really my fundamental trade, and vice versa. If you're looking for buys on the euro against the pound, then you have to really understand why the pound is a sell, an all-out sell, and the euro is an all-out buy. And as I said before, I think the pound is I'm leaning towards obviously sells, but I think maybe now might be a little bit too early. So and plus as well, even if I wanted to be a seller of the pound, um, actually, would I do it against the euro? Yeah, probably I would do it against the euro, but I'm gonna still maybe hold out until prices come down here before I actually decide to maybe enter into a smaller position. But again, I think if I'm selling the pound, I think I'd rather go with the yen, and do a pound yen trade, because in a risk off environment. In a risk on environment, then I probably would look towards buying the euro pound. But again, the data would have to support that. Aussie dollar, again, risk off. The Australian dollar will weaken, and the dollar should strengthen, and this is what we're seeing. So you're seeing a bit of a pullback before prices have made making lower lows. We've got now a new area of supply to look for. So any pullbacks back up into this area here, that's going to be nice for a sell trade if you're looking to buy the US dollar and sell the Australian dollar. So again, you would definitely need more risk off to remain in place with the tariffs coming in. Of course, nobody knows, but let's see how the market reacts to the reciprocal tariffs. Also, as well, China. If China is seen as growing as well and actually benefiting, then of course the Australian dollar, I think, will benefit. But the Australian dollar and the RBA, the Reserve Bank of Australia, are looking to cut rates as well. So that's going to end up probably being a bit depreciative for the Australian dollar over the next couple of months. But again, it all really kind of depends upon um, the um, the tariffs and how they play out. Gold, gold just making new highs, right? Waiting for a pullback. Was doing some analysis last week, just waiting for a little bit of a pullback. But prices, of course, have just basically blasted off, right? Lots of uncertainty in the market. Gold confirming that. So this is what happens when you have strong fundamentals. This isn't driven by Elliott wave, wave 1, 2, 3, 4, 5. It's driven by the fundamentals, really. And if it just so happens that you see it move in an Elliott wave, then that's basically what it is. But ultimately, this move it's all been driven and always will be driven in terms of, if you see 1,000 pip moves, massive moves in the market, it's because there's strong fundamentals, strong risk sentiment, I should say, not risk sentiment. So yeah, that's basically it. Looking for a pullback if you're looking for to continue that move, and of course with the S&P, looking for a trade to the short side, risk off. Of course, coming into the market, prices sold off on the Wednesday. A nice trade there if you manage to get involved in that. I was saying that last week. Personally, I would rather be a buyer of the S&P, probably not now, because of obviously all the risk off sentiment that's going on, but ultimately I'm looking for probably buy trades, because I think that the over the medium to long term, the tariffs will likely be resolved, and so I think the S&P will start to rise again. The Fed should continue to cut at least a couple of times this year, so that should benefit, the stock indices. So let's see what happens. But if you are looking for a buy trade as well, you can actually look for one right now. Very tricky though from a sentiment perspective. We are reacting off of, this demand zone at the moment, so there is a buying opportunity. But yeah, you'd have to really anticipate the tariffs being a bit of a non-event for you to really want to be a buyer at the moment. Very tricky. Anyways, that brings us to the end of the analysis, looking at the trade updates. So trade updates, starting off on the Swiss yen. So really kind of took two trades last week. I was going over a trade that I had taken. Now the trade was a loser. I ended up losing 3 positions on this. This was my entry here, and actually I got stopped out by around about a pip or two. My stop loss just wasn't wide enough, and I ended up being stop hunted, right? So as prices came up, I ended up being getting triggered into 2 then 3 positions here, and I had my market order there, and then literally, as you can see on that hourly, came up. Stop loss was, I think, was at 43 or something like that, 42, and then it came up, went to about 44, and then reversed. So it is what it is, but I ended up actually getting involved again. So I re-entered here. So this was the re-entry right there. And then now I am only in 1 position, because we haven't necessarily pulled back to trigger into another 2 positions, right? So again, same thing, I'm looking for a pullback, or if prices basically get to you know uh, at least a 1-to-1, then I can take off some profit, but it hasn't done that yet either. So let's see what happens with this trade, and yeah, we'll keep an eye on that. So the New Zealand yen, again, I've been in this for a couple of weeks now. The first, I managed to get into 2 positions, entered into 1 position here, and a 50% pullback, and ended up getting a 1-to-1 on that. And then the market order, I trailed my stop down slightly to around, I think it was just above this area here. Didn't move it, didn't trail it, matter of fact, and then prices pulled all the way back up, and then now we're basically back down here. So this trade is going well so far. So I think my stop loss is somewhere around here. So at the moment it's about 2.68 to 1. My ultimate profit target is going to be around the 84 round number, just below it, going to be there. So let's see if it can get there with risk off sentiment. Hopefully it can, and then that is going to be a very nice trade. It'll be like a 3.5 to 1, and that will make up for a lot of the other losses. And then the other new trades that I'd entered into, which was the Euro New Zealand. So this one was a total profitable trade. So managed to get involved in this from here. Again, had a pullback, 50% retracement entry as well, which obviously you get better risk reward when prices do that. So that was the risk reward. Managed to get a 1-to-1 on that position quite early, and then on the market order, which was here, I've taken profit. matter of fact, and that was a nice 2.5 to 1. So this whole trade, was a profitable trade. One was a 1 to 1, the other was a 2.5 to 1. Again, from a fundamental perspective, this was actually in a daily zone. So yeah, this was where it was. Prices came up and basically hit the 80% target. So that's where I am. I'm out of that trade. And CAD yen. So I'm in this trade as well. Managed to get in on this area here. So it was this price action here. This was a bit of a, actually was a stop hunt, so managed to get in around there, and then end up getting into two positions. So when it pulled back again, it went to 50% area, so right here, which reduced my risk reward in terms of having to, I can get a 1 to 1 quicker, right? And that trade gets me to um, profitability, or at least a minimum of a break even. And then now I'm only in really the original entry. And so that right now is at a 1.14 to 1. I'm looking to hold this down again to 80% of the auction, the range. So that would be from that high to that low. And then we've got the target, which is going to be here. So let's see what happens. If it can get down there, then again, this would be a brilliant trade. Also, as well, I'm going to start to trail my stop down, hide behind some swings, and then let's see what goes on with this trade. So as long as I start to reduce my and trail my stop, I'm obviously locking in profits because I'm already, at a profitable position with the 1 to 1, and then I'll just trail my stop down and see what happens. Hopefully, from a risk off perspective, the yen continues to be a buy, and basically the market piles into the yen, and with the Canadian dollar being a risk off currency, I say risk off currency, I mean not doing well in a risk off environment. It may start to sell off, continue to sell off, and then we get basically a move back down to the 2010225 area, and that would be a nice trade. So yeah, that's the trades this week. Second time in a couple of weeks where I've been stopped out really to the pip, unfortunately. But it is what it is. Did was it the pound dollar a couple of weeks ago, and now this one. But again, over the medium to long term, keep trading, keep taking the shots, and keep going for great risk reward. And although in the short term these trades can be frustrating, the overall equity curve continues to grow. Anyways, guys, that's it. Hope you enjoyed the analysis and found it useful. Take care, and hope you have a great trading week.